The global financial crisis has affected many major overseas banks to varying degrees. Some are struggling to survive and others have collapsed completely. Yet the big four Australian banks have been relatively unaffected. All four have retained their AA ratings and multi-billion-dollar profits continue to be the norm. This is mainly due to the stringent regulation of the Australian financial sector over the last 50 years. One aspect of this is the Four Pillars policy, introduced by the Keating government, which prohibits mergers between the four major banks and focuses their attention on the Australian domestic market.
So lending people money to buy houses, providing credit cards and insurance and all of those sorts of schemes. So they just haven't dabbled with, whether you want to call them toxic assets, bad loans, whatever you want to call them, the stuff that happened in America and England in particular, our banks just haven't done. We've had a few, like the National Australia Bank's had some exposure to stuff that's happened in America and England, but for the most part, our banks have worried about the Australian business.
Four Pillars I think enjoys community support and broadly bipartisan support, which says rather than allowing the four banks to cannibalise each other and perhaps become three or two players would absolutely dominate the market, which would reduce competition. But at least Four Pillars has retained some modicum of competition at the high end.
Because they've been locked up inside our economy, they haven't been exposed to the worst ravages of overseas stuff.
Banking or otherwise have always argued against government intervention, against government regulation, low tax, low government spending. As soon as a crisis hits, all of a sudden that goes out the window and they're all calling for the support.
Despite regulation shielding the four major banks from the worst of the global financial crisis, massive job cuts in the industry are still occurring. Whilst it's true that profits have recently slumped, Leon Carter believes this does not warrant such a massive loss of employment.
Well, in the last 6 months, there have been 9,000 workers who have lost their jobs in the Australian finance industry. That's in the last 6 months, 9,000 people. In addition to that, over the last 2 years, over 5,000 jobs have been sent overseas. So it's an incredible exodus of workers in our industry. These are dedicated finance workers who are being shot outside the door with all of their experience, with all of their knowledge, and they're basically being sent on to unemployment. The fact is that Australian banks are doing fantastic at the moment. It's harder for them, but they continue to make billion-dollar profits. These are big companies who in these very difficult times can do the right thing and keep people in jobs. It's not a small business, it's not a milk bar that if it doesn't get rid of a couple of people, it's got to shut its door. It's our view very much that they are using the global financial crisis as a cover to get rid of jobs. They pay redundancies, they send jobs overseas, but they do not have to do it.
Whilst the four major banks are still doing very well, smaller banks are finding it difficult to cope in the current economic climate. Despite this, organisations such as the Members Equity Bank are refusing to lay off staff.
We've very deliberately decided not to do that, and we've indicated to our staff that their employment is secure. There's no plans for any redundancies, because we think that our staff have been very loyal to us and committed to us and helped us grow a very, very strong and successful business. We've had very strong and rapid growth over the last 10 years. And the first time we hit a bit of a tough patch, we think it's important to repay that faith and say to people, our objective is to make sure that you are secure during this period of unprecedented economic uncertainty. Now we'll need to reallocate resources internally, consult with the staff and consult with the FSU, the relevant union, to make sure the business maintains momentum and profitability. But our first reaction is not to shed jobs. Our first reaction is to give people faith and hope, to secondly inspire them to restructure appropriately, and thirdly to build productivity. And so we think that in the long run that's going to be a better framework for an adaptable, high productive organisation as opposed to sacrificing jobs at the first sign of trouble.
The federal government has implemented policies to secure Australia's banking sector, such as the Deposit Guarantee, which ensures that depositors with Australian credit unions, banks and building societies will be guaranteed repayment of their funds in the unlikely event that any banking institution faces stress. However, this guarantee hasn't been evenly applied and favours the four major banks.
If you're a big bank, you get that guarantee cheaper than if you're a small bank. If you deposit money with a big bank and you want the government guarantee, it will cost you 70 basis points. If you want to deposit money with a small bank and rely upon the government guarantee, it costs 150 basis points. So all of a sudden, where we used to be operating on a level playing field, in a crisis when perhaps, we all need some level of support, the big banks, not only do they dominate the market, not only are they wiping out their competition, and Commonwealth Bank has bought Bankwest, Westpac has bought St George, so they're wiping out their competition, they now actually get a benefit of having a lower cost government guarantee. What the government's doing is guaranteeing bank deposits, which is on balance sheet activity. So if you're a big bank with a big balance sheet, you get this proportionate advantage of a government guarantee. Smaller players like Members Equity rely upon off-balance sheet activities called securitisation. It's a technical process, I'm not even sure I fully understand it, but it's an off-balance sheet capability. Now, if the guarantee can be extended to off-balance sheet activities where we raise our money in capital markets, backed by AAA rated mortgage securities, if the government guarantee can be extended to the securitisation markets, the game changes. All of a sudden, we've now returned to an equal playing field.
In addition to the competitive advantage the four major banks have, Leon Carter believes a lack of conditions placed on the deposit guarantee is a major concern.
There is no doubt that the Rudd government's public policies through the deposit guarantee and a whole range of other things have helped Australian banks be more profitable. But the Rudd government has forgotten one thing. They have put no conditions on that support. Every other government around the world has made that support conditional, but not the Australian government. The Rudd government should be absolutely imposing conditions that says no more offshoring, that every single thing that they can do to stop job losses must be done, that they should be passing on in full interest rate reductions. The reason that they give that they don't pass it on is that the cost of wholesale funds has gone up. But if you look at the price of wholesale funds, especially the international ones, it's actually come down over the last 6 months. So there is absolutely no reason why they can't pass that benefit on to the customers. And I think the government, at least this time when they've decided not to pass it out, have made comments, but they're nowhere near as harsh as they should be. Kevin Rudd should haul every single CEO from a bank into his office and not let them leave that office until they guarantee to pass on every single interest rate cut, stop sending jobs overseas, and do the right thing by the Australian community and the people they employ.